What's up, everybody? Welcome back to the Next Win podcast with your host, Aunt Ma, and co host, Justin Vaseur. And today we have a special guest. He is a lender, very experienced and knowledgeable in the industry. Thank you, William. Thank you for being here today.
Well, thank you for having me.
And so today's topic is going to be about, are interest rates actually really high? And the number one response that I get is, interest rates are so high that I can't even afford a home. Thanks for being here, William.
Thank you for having me.
Does everyone say your name Nguyen? I know a lot of
Nguyen.
people say
It is
Nguyen.
Nguyen. The funny thing is, throughout until I was in college,
Yeah.
I pronounced it Nguyen because everyone
Right.
pronounced it that way, and then until I got married, my dad was like, "No, it's Nguyen."
Oh, you pronounce it.
I pronounce
like
it
that.
Nguyen too. Yeah,
So-
because it's easier for people, right, to spell it. Because
Yeah.
you say Nguyen, they don't know how to spell it, but you say Nguyen, they're like, "How do you spell that?"
So you don't get offended because you were actually saying it like that
Yeah,
yourself.
I don't get offended,
All right.
but now I do try to correct people.
So I do have other Vietnamese friends as well, and when they say Nguyen, they get pretty mad. So that's kind of why I brought it up.
Yeah.
But William is a lender, and he's going to answer all the questions that we have today. I know Justin will have a lot of questions. We have a lot of listeners that asked us a Q&A as well, so we'll respond to that later on. And going to the topic about, are the interest rates really high? If you can't afford a home because rates are high right now, I don't think you're in a strong position to be buying a home at all, even if the rates are lower. Let's say, what is the rate today, William?
I checked earlier today. Rate is about 7.25%.
That's high.
Yeah, I mean, and rates change every day. People don't realize that every day the market moves. It's kind of like the stock market; it moves up and down. So rates can change every day. Rates about 2 weeks ago, I think it was about 6.5%. So
Okay.
and it's just been bad in the past couple of
I
weeks.
got a quick question.
Yeah.
Why do they keep changing?
It's like the stock market, right?
Okay.
It's kind of related to. I don't want to get too detailed with it, but
Got
it's
it.
related to treasury bonds and how they react and stuff. So
Interesting.
yeah, it's all tied to, all falls back to like the stock market kind of thing. So
That's so crazy.
yeah.
So, maybe one day you can afford, a home. The
Yeah.
next day you can't because the rates move around so much and then you don't qualify, right? But like I was saying, if you can't afford a home because the rates are high, you probably shouldn't be buying a home even if the rates are low. So today, we're in March and the rates are, what'd you say, 7 and 0.25%?
Yeah, 7.25. Yeah.
Okay. And it's, to me, in the last couple of years that I've been doing real estate, this is the highest it's ever been. Is this today the highest it's been in the last few years?
In the last few years, yes, but historically, this is about average, right? I think when our parents bought houses, the rates were what, like 12, 10%.
No
I think
What?
in 1981, it reached about 17%,
Yeah.
or was it 20%?
Around, they're pretty high,
Something
high,
like
so-
that, right?
That's
But
crazy.
the
Yeah.
house prices were a little bit lower back then. But still, these are historically, these are still pretty low rates.
Yeah.
But it's all relative, really, in the market, the situation, the year,
Right.
So
So a lot of people are saying, rates are high, which, yes, I would say anyone who's been new to real estate, it is very high. But like you're saying, in the last 50 years, it's actually the lowest.
not bad.
It's really, really low, right? Compared to 20%,
Yeah, because
right? We're at 7% right now.
people have been spoiled, right? Anyone that kind of for past 5 years has been
Yeah.
spoiled with what rates are like 3-2%.
That
Yeah.
is crazy.
And that
too.
was just like a perfect storm with
Right.
COVID and everything. So that just created a perfect storm where we had to drop rates
Right.
to kind of help everyone. So, but that's unusual. I don't see that happening. In my opinion, I don't see that happening for a very long time unless another pandemic happens and something
So-
crazy like that.
That's usually when it happens, when something crazy goes on.
Yeah, or the stock market crashes and something
I
like
see.
that. Yeah, so it has to be something pretty big.
So-
dropping down that low.
People say, are the rates going to keep going up? What do you think is going to happen? In summertime, in the real estate industry, that is when people buy homes the most because, one, families have time, the kids are out of school, so they can go look for homes. No one wants to really do anything during the holidays or while the kids are in school. So summer is peak time to buy and sell a home. Where do you think the rates are going to be by summertime?
I don't think it's going to change that much. I know. I was here a few weeks ago for a mortgage conference. Actually,
Yeah.
We had top economics people come in and kind of talk to us, and looking at the numbers, in our opinion, and of course, no one has a magic ball. Right. No one knows. If someone knew that, then they'll be a billionaire.
Look, anything we say right now is basically. It's only our opinions.
Yes.
We can say what we know based off experience.
Yes.
But it can turn the other way very fast.
Yes. So basically, it's based on our experience, based on us viewing the historical numbers.
Yeah.
Right. And we do expect the rates to drop a little bit in the summertime.
You're talking about like 6%, 5%?
Yeah, around there. Nothing,
Fives?
No, I don't know about fives.
I was going to say that's fives. I'm about to wait on buying some investment homes right now.
But that's the problem. I don't. People think that they should wait for the rate to drop to buy a house, right? But that's the total opposite thinking.
What do you mean?
Like, because let's think about it. So let's say we have some clients, right? We talk to them. I'm going to wait for the rates to drop, right? So the problem is, so is everyone else, right? So right now, most of our clients that are buying a house now, they're not having problems with being outbid, right?
Right.
Or losing contingencies like appraisal contingencies,
right.
Loan contingencies and anything like that. And then they get a lot of seller's credit. Like I know you've been helping with a lot of seller's credit.
So a lot of things that actually help, a lot of people, like you said, are waiting for the rates to drop before they buy a home.
Right.
But what you guys don't know is that me and William, we work together. He's the lender that all my clients use to get pre-approved and actually get the loan going. And we have been winning offers and negotiating with sellers to get the rates 1 to 2% less than what today is.
Right.
Right. So if today's rate is 7.25%, we're actually making deals at 5.25% in the first year for you, 6.25% in the next year. Right. And then it goes back to the normal in the third year.
Right. But the best part is the house prices, right? They're getting it at a good
low.
price. Yeah. And they're not overpaying for it.
What's funny is that because we're in this industry, we know that the prices are low right now.
Right.
Mm-hmm.
And to you, Justin, since you're new into this real estate world, is it expensive to you or is it cheap?
Oh, it's expensive for sure.
Exactly.
Yeah.
It sounds,
especially
it's a big purchase.
Yeah, especially when you hear like your parents buying houses at like 120,000 or something like that, and then now the same house is almost 400 or 300. You know what I mean? It's like what?
Yeah, it's crazy. Everyone who's a first-time home buyer or who doesn't own a home, they tell me the exact same thing as you do, Justin.
Yeah.
They say, it's so expensive. I'm like, hold up. It's actually really cheap today.
Yep.
Mm-hmm.
Way cheaper than it was a year ago.
Right.
So they're always afraid. They're like, prices are always going to go up. I'm never going to be able to afford a home, And now rates are up. I for sure can't afford one. So what do we do here? Like, how are you going to ever buy a home, Justin?
Yeah, I mean, I'm trying to figure that out right now.
Well, that's why we're here to help, right?
Yeah,
So back to your what you said. Like our parents bought a house for $120,000, $50,000. But what people don't think about is they were making less back then too. So,
right.
So
yeah.
like I say, relativity.
Yeah.
Relative to their time,
Mm-hmm.
right? Basically, so the houses were 120,000, but they were making way less than us.
Right.
The
True.
money, yeah. So now we're making way more, but of course everything costs more.
Right.
So it kind of balances out. So you don't want to be stuck in that mindset, because I used to be like that. Like, oh man, my dad bought the house for 120, now I have to buy a house for 500,000.
Right.
But a lot of people that graduate now, they're making close to 6 figures or even more than 6 figures.
Does anyone know how much your parents were making back at that time?
Yeah, I think like 20,000, maybe 15 or something.
A year?
That. Yeah.
Yeah, I know. Like, I know my mom was talking about it. She was making like, I think it was $3 an hour or $5 an hour or something like that.
Yeah.
That's crazy.
Remember like cheeseburgers back then? Maybe it was like 29 cents.
Yeah.
You know what I mean? Like 29-cent cheeseburgers.
Well, that was like only 15 years ago.
Yeah, that's it.
And those are special deals that they were doing.
Yeah.
I also weren't the houses pretty cheap too before the pandemic? So like comparing those prices to now.
So I would say that pre-COVID the prices didn't increase like crazy yet. It was just on a normal steady increase.
Yeah.
As growth should be.
Yep.
And once pandemic hit, everything blew up because people were like, hey, we're not going out. We're not spending money unless they're hoarding toilet paper and frozen food.
Yeah.
Right. But they had a lot of money saved up. They're getting help from the government, EDD, You know, a lot of people weren't paying rent.
Business loans, the free
Right.
business loans, you know.
So
Yeah.
a lot of free money was going around, which is why now we have crazy inflation. But that caused everyone to react like, hey, I want to do something with my life. I want to buy a home right now. You know, what's going to be meaningful for you? So a lot of people were buying homes, and because of that, people were competing against each other. You're
It's a
talking
perfect
about
storm because the rates were low too.
Oh,
Right, true,
This
true.
is like the lowest of all time.
Yeah.
We're talking about you can get a rate for like 2.25%.
Yeah. People are buying $1 million
Okay.
houses
So-
with like 6-figure salaries, right? I mean, you have to have 6-figure, but like low 6-figure salaries because of the rate,
Right.
right? So, yeah.
So when I had my home pre-COVID, it was a $600,000 home. My rate was 4%, and I was paying about $3,000 a month after property tax. So about $2,400 a month before property
Pretty good.
taxes. And when the rates dropped, I refinanced to 2.65 or something like that. And I started saving $400 a month instantly. You know, like that is an incredible amount of money that you're saving every month. $400
Yep.
a month. Okay. So that's why people were like, whoa, rates are so low right now. I need to buy a house and lock this in for the next 30 years.
Yep.
Okay. So now you're tied with, you're tying the low interest rates, and then you have people who have a lot of money. So no one cared how much the price of a home was. They're all thinking about how much the monthly is and how much they're saving. So they're willing to put $50K over asking, $100K over asking, because they know over 30 years, it's still going to be worth it. You know, they know that in a few years, whatever they're overbidding is their house will be worth more than that.
But one thing to think about, well, people think that way, but the one thing to think about is a majority of people do not stay in their house more than 5 to 10 years. Most likely you're going to sell it or buy a bigger house.
That's true. I'm on my third house,
See?
and the longest I lived in one has been 4 years.
Yeah.
And the house that I just bought recently, I'm planning to be here for 2 to 4
Yeah,
years.
see, so
you
like
know?
you don't want to think that because back then, like last year, we were having people outbid, over 100,000 over, right? And then the problem with that is you have to have cash, because the appraisal when you actually go out and see how much the house really costs, it'll be $50,000-$60,000 under what you offered. So what that happens then is that the lender will only let you borrow up to the appraisal amount. So that 50 G's, you have to pay for it.
Got it.
Right, and people are doing that.
Because they had the money. They,
That is
they
so
saved up
crazy.
EDD money and rent money.
But the problem is, if
I should have done that.
Yeah,
Damn.
yeah. But the problem is, if they're planning to sell within 3 to 5 years, you better hope that house value goes up, right?
Right.
But now that you can see that house value has gone down a little bit. So
Yeah. So everyone who bought a house during the pandemic at the highest prices,
Yep.
you should not sell your home right
Nope.
now. Because if you do, you're losing money for sure.
And we have some our buyers buying houses from people that are like, they're not making any profit because they bought the house like a year ago, and it's just breaking even barely.
No, I wouldn't say that. I would say that everyone who bought the house that I've worked with,
Yeah.
It has increased a little bit.
Yeah.
Because when they bought it, it was really, really cheap. We're talking about, $150,000 less than what it was in 2021.
Right.
So when I was helping people in 2020 pre-COVID, they're buying these homes for, $700,000. And then 2021, it jumped to like 850,
Yep.
900,000. Now in 2023, it scaled back to about 800 grand.
Yep.
So they are making, if they wanted to sell the home, they're probably making about 50 grand, But if they wait until we get out of this correction period and it starts increasing again, I would say in the next year or two, maybe 2 years, right?
Yeah.
Then that's when they'll start cashing in.
So everything's cyclical, right? So it means it's a cycle, right? It'll go up and then go down. Like the housing, if you look at it historically, house prices and mortgage rates have always gone up and they're gone down. Like you'll pull up the history, you'll see it. It's like a little roller coaster. But house values always continue to go up, especially if you live in areas like Nevada, Las Vegas, and California. So I mean, if you live in the Midwest, it's a little different, right? Or like some middle of nowhere, like Montana or something. It'll be a little different.
Well, there's just certain areas that just never grow.
Yeah.
Like Compton.
Yeah.
Right.
Well, Compton's getting better.
I mean, they're like, 400K, 500K homes now.
Yeah.
But they're not like close to a mill like everywhere else in the LA County.
Yeah, you're right.
Right. Almost every home in LA County at one point was almost $1 million. We're
That's
talking about
crazy.
the mid 900,000s.
Yeah, right.
Last year
Yeah, I grew up in Highland Park, right?
Yeah.
So my parents
in the ghetto.
In the ghetto.
Yeah.
Highland Park before it got
If you guys don't,
gentrified.
if you guys don't know Highland Park, I
Northeast
also
LA.
spent a lot of summers there because I had family that lived there and still do. This is where there's a lot of cholos,
Yep.
a lot of Vietnamese gangs, Chinese gangs. You'll see people get stabbed,
Yep.
robbed, and during those times, we'd be riding our bike and
Yeah.
just because we're doing kid stuff
Yeah, yeah.
and seeing these things.
Yeah.
But what were you saying about that?
So those we never thought that a house in Highland Park would be worth $1 million, but there are houses now in Highland Park worth $1 million.
Can you imagine that?
Yeah.
Living in a place where there's nonstop drive-bys and it's $1 million.
Yeah, I mean it's gotten better.
Yeah.
I've heard. I mean, it's gotten a lot better, but I still hear people complaining about drive-bys and stuff.
Yeah.
That is crazy.
Yeah.
Yeah,
But,
I mean, even I heard it in my previous house.
yeah, yeah. It's just part of the living in LA. Right?
It's like
yeah.
every weekend you think it's fireworks, but they're actually gunshots. Every single weekend.
Yeah,
Your neighbor's getting shot up. You're
It was crazy stories back then.
Yeah.
And I lived like I remember waking up to my neighbor, all these police cars just surrounding the house and like just calling the guy out. I'm like,
yeah.
that's just
A
crazy.
lot of helicopters with the spotlight going inside your house.
Yeah, yeah,
I've been through that before.
yeah.
Are there ever times where it's like, oh, you shouldn't buy a house right now?
I think that you should always buy a home when it's the right time for you.
Yes, if you can afford, like right now, if we, of course, you always talk to someone like us, like a professional, kind of go over, like we go over the budget with you and see how much you want to spend. Some people want to spend, we call it DTI, so debt to income, right?
Right.
So most loan programs, maximum is 50%. That's half your income that goes to your house, right? And we have people that go 50%, like balls out, 50%. Like I'm going max to get this house, right?
Why do you think they're doing that? Is it because it's like a dream home?
A lot is because they want their home.
Or
right?
is it the rate today?
No, I wouldn't say rate, but like rate everything. Rate, and they want to get out of renting because renting's expensive too.
Yeah.
Right. So everything's expensive.
Yeah.
But at least now they get in the house, everything's theirs, and then especially they're getting into the house for a good price. They're not getting overbid, right? So the one thing I always tell our clients, right, is that yes, rates are a little high right now, but yes, it's a 30-year loan, but that's not permanent, right? House prices, when you buy it for, that's permanent. But interest rates and what you're paying monthly, it might be permanent for a year or two until you refinance, because rates is always going up and down. And once that dip goes down, you jump in and refinance. And I would save $400, between $100 to $400 a month. And every time it dips, the longer you're in the house. I mean, there's no rule of how many times you can refinance, right? You're normally about 6 months since the time you last refinance. But like when the rates were dropping in 2020, 2021, I had people refinancing like three times the whole year. Once in the beginning of the year, rates dropped again in the summer, they refinance again, and in the end of the year in December when they drop, they refinance again.
You know what's crazy? I have a friend. If the rates drop and he saved $20 a month on his mortgage, he's going to refinance.
What?
To save $20 a month.
Yeah, some people are like that.
Are there any costs that go into that?
There are closing costs, but the difference is when you buy a house, the closing costs you have to pay. Oh, sorry, I hit the mic.
No,
but when you buy a house, the closing costs you have to pay out of pocket. But when you refinance, there is closing costs. An average closing cost about $3,000 average.
Okay.
That just includes like escrow, title, and appraisal, and then the lender costs, right? Like
so that's
processing.
why right now I tell a lot of my buyers that because we can negotiate home prices to be a lot lower than what they're asking right now, factor in another $3,000 for a refi in a couple years.
Yeah, but see, with the refi, you don't have to pay it out of pocket. You can roll that into the loan. So like, let's say their loan's $350,000, right? And then of course, when you refi, you have to count, the lender is going to charge the extra interest that they want to get back. So we'll add like another $6,000 on top of what your amount is due to cover your closing costs. So that's the advantage of refi, is we can just roll the closing costs into the loan. So it's kind of like you're not costing anything. You're just spreading out the payment.
It's like when people say they want to buy a fixer upper because they can get 40 grand less than what they're offering, and then they're gonna put money into upgrade the home, and then they want to flip it or whatever. But mainly when people want to buy a home that costs less, it's because they want the mortgage to be low, right? And then there's people who are like, I want a turnkey home, fully fixed already. I don't want to do anything. And you're going to pay top dollar for that home. And these people, I tell them, that's actually a great idea, because instead of shelling 40 to 50K into upgrading your home, you're throwing it into the loan because it's already done for you.
Yeah.
So I don't got to pull out 50K from my bank account. Like, it's just in the loan.
Right.
It makes life a little bit easier.
Yeah. So just like people think about the rates going high. Well, there's options. There's something called, you can pay points to buy down the rate. So a point is basically 1% of the loan amount, right? So let's say the rate I just quoted today was like 7.25. That's with no cost, right? That's with my clients, we always try to give the best pricing, of course. But you have the option to pay 1 point, which is 1% of the loan, to buy it down a little bit, like 6, maybe like 6.5 maybe.
How much does it cost to do that?
Usually 1 point, so I would say like 6,000 around.
How often do people buy down their interest rate?
Lately, more, right?
Yeah.
But depends. It all depends on your situation, right? We have those temporary buy downs, or we have the full like a full fixed buy down where you just pay that $6,000 up front. And that's your rate for 30 years until you refinance again.
What's the temporary one?
The temporary one, it's a little bit temporary one. We buy down the rate like almost, let's say 7.25. We try to drop it down to 5% for the first year.
It's called a 2-1 buy down program.
So the first year the rates are like a little bit about 5%, and then the second year it jumps up to like 6%, and then third year it just goes back to your regular rate.
I see.
The goal behind that though. The goal behind that is that people want to cut the minimum monthly payment down.
Yeah.
Because they're going to refinance within 1 or 2 years.
I see.
So you're paying a low rate, because knowing that maybe in 1 or 2 years rate's going to drop, and you just refinance before that rate jumps back up to.
So we're talking about two different things here. A couple minutes ago, we're talking about buying down the rate, which is what the buyer would do.
Yep.
They'll buy it down for the next 30 years. This temporary 2-1 buy down program that now we're talking about is the seller will pay for the program for you. So they're going to shell out 11 to 20 grand when you buy the home and help you with that program. So it's a huge difference. I'd rather not buy down anything right now and use my own money. I'd rather have the seller buy it down for me.
Yeah.
And it's happening every single day in this market. Even when the rates were low, when I bought my second home, they were like in the 3% or 4%. I also bought my rate down as well. I usually always buy my rate down just because I want the better deal.
Yeah.
Sometimes it costs only like $2,000 to buy down.
Depending on how much the house is. Yeah.
Yeah. So, well, my next question for you is, when do you think the rates are going to start dropping?
In my opinion, and a lot of people's opinion, I wouldn't say dropping. Like you won't see 3 to 4% for a while.
No. When are we going to stay at a steady 5%? That's what I want to know.
I think.
What if we go to war?
We go to war. We might be going to 10%.
We're kind of at war right now.
Yeah.
The environment, so my background before I did mortgages was in investment banking, right? So normally when there's a war and when the market does bad, interest rates are low. But it's been chaotic and it's not happening. So it's very hard to kind of pinpoint.
We're very close right now to a war. There's China who's about to help Russia. Is that what's going on?
Yeah, something like that.
Yeah.
I don't know.
It's crazy.
There's
a lot of crazy stuff going on right now.
Yeah.
I don't know what to believe right now.
Yeah, everything's crazy. I mean, look, we didn't think Russia was going to invade. And it didn't happen. But then everything went up. It was the opposite, right? So we're thinking maybe towards the summertime, right? Or starting like spring, summertime. Maybe you'll see a small dip, right? And then we may see a refi boom, meaning because people are buying houses now. Like I said, they bought the houses at a good price. But now 6 months in, they're going to refinance to drop their monthly payment because we predict that. We are hoping and predicting that the rates are going to drop in the summertime.
Well, I mean, that makes sense. If today is 7.25% and it's at the highest that we've ever seen it, then we can only expect it to at some point be lower than what it is today.
Yeah, a little bit lower. But even if it drops 0.5%, depending on your loan, that's a lot of money still, right? Monthly, and it adds up.
Here's a question. No one ever thinks about ARMs or even 15-year loans. If you get a 15-year loan, the percent of your interest rate is way lower, and you don't ever have to pay off your loan in 15 years. You can just refi, right?
You
Can you do that? Can you buy a 15-year loan and then refi for a 30? Can you just buy an adjustable rate mortgage, and, an ARM, and do that?
You can, but the adjustment rate mortgage is kind of high right now.
What is it
Still,
at?
I don't know on top of my head.
It should be lower than the 30, right?
Maybe a little bit, but it's not worth it because
You said 30?
30 year.
30 year. I was like, what the?
Yeah.
30%.
Yeah, I was like,
30%.
No,
My bad.
and an ARM is an adjustable rate,
Got it.
and so it would be like
it'll be fixed for like say
3 years?
3 to 5 years,
Mm-hmm.
and then after that it'll just jump up, right? Yeah. So, but the problem with that, like the 15-year and that your monthly, especially the 15-year loan, your monthly payment's higher,
Mm.
right?
it's like double.
Yeah, it's kind of like buying a car.
Yeah, yeah.
Right? You want to do 60 months or 72 months, right? Because your payment would be lower.
Mm-hmm.
But you're getting the money back when you sell it.
Yeah. So, but it all depends. That's right. It all depends on everyone's situation. Everyone's different, right?
Mm-hmm.
Everybody's there. Everyone's situation is different.
So if you guys do want lower rates, you can get it, but you'll just be paying more. But it goes towards the principal.
Yeah, but we will. But that's why it's always important to when you're thinking about buying a home, like just to sit down and look at the numbers and make sure you get a good loan officer that actually digs in the numbers with you and can give you all the options, right? Not pushing you towards a product that they're used to or anything.
If you guys have an agent or a lender that's just trying to close a deal on you,
Yeah.
And doesn't care about how comfortable you are with your budget, sticking with a budget, like that is already a red flag.
Yep.
The number one thing I do is I want to make sure in the first year of owning your home that you're comfortable, that you're not stressing out with payments. You know what I mean? Like, I don't want to put you in that situation.
Yeah.
No one should ever do that. You know what I mean? Like, we should advise everybody. We should have a code of ethics telling everyone that, hey, look, if you're going to be happy with these payments and you can afford it, even if you lost your job, like,
We want to make sure
you can do it. We don't want to put you in foreclosure and then put
Yeah.
you on the streets. That's horrible.
And that's the problem now, because even real estate agents and loan officers, the business is business. It's not like before. It's very slow. So you'll have people over there that are really hungry, like, oh, I got to push this sale so I can make. Cause we're all commission, right?
Yeah,
Like,
yeah.
I got to push this sale so I can pay my bills, right? But me and Ant, the way we've done it is we pay it forward, right? We want to make sure we take care of the client, because at the end of the day, we're not trying to do a one-time deal. Right? We're trying to just build that relationship that we can continue to build our business. That's not the way to build our business, our business, and our,
But I just don't want to be a jackass.
Yeah, jackass,
And I don't
yeah.
want to be that, like, a bad human. I want to be a good
Yes,
human.
that's exactly. That's
You know
why
what I
we
mean?
want to be a good human, and because as long as we're showing that we're being good humans, we want to spread that love. We want to spread that kindness, right?
I think
Yeah,
every agent should be like that, man.
What'd you say?
I think every agent.
Oh, I
should
thought
be
you
like
I
that.
heard
What you guys
Asian.
say?
I know.
I heard Asian.
I heard Asian too. I was
I
like,
didn't say Asian.
That's
No, man.
funny. No, I think I like that because it keeps everything healthy, right?
Yep.
Because a lot of times it, at least from my perspective, it seemed kind of sharky.
Yep.
Like kind of like you're driving into a car dealership
Yeah.
and everybody's trying to get after you. You know what I mean?
That's what happens.
Yeah. So I think that perspective is really cool.
You know what? Anyone out there who is buying a home right now with your agent, ask your agents, do you own a home? You might be
Whoa.
dealing with an agent who's never bought a home or is 18 years old and doesn't really know what he's doing. They might think so because they have scripts, but you got to get someone that you can trust that knows and's been through things. You know what I mean? Like, I'm a homeowner and I can tell you when things are wrong with the house, or I can tell you how to fix things, all the secret things that I've learned as a homeowner. You know what I mean? Not even as a real estate agent. Those are the things that you should be, well, you're not paying for it because you don't pay the agent, but those are the things that, you should look out for.
Mm-hmm. So earlier you were talking about how like it's important to just buy when you're ready to buy,
Yes.
kind of thing.
Financially ready.
Right. So like I guess, yeah, it's important to buy when you qualify versus, maybe later you can't qualify or something like that.
Exactly.
How to-
Because later you might not have a job. What if the company you work for goes out of business, or it's your own company and it goes out of business?
Mm-hmm.
Then if you have no job or no money coming in, how can you buy a home? So that's why I tell everyone, when you qualify, that's the best time to buy a home. Like you never know what's going to happen. Whether you lose a job or some kind of hospital bill comes up or a family emergency comes up, you might not have that money later. You know what I mean? Um, so it's always best to see if you qualify now. A lot of people don't even think they can right
Yeah,
now.
we had a couple buyers that didn't think they can, and then we sat down with us. I went over the numbers and go, look, like, do you feel comfortable with this? And then we made it work. And there are some close ones that we made it work. Like they didn't think that was gonna go through. We made it work. They're very happy in their home, right? Because it was better than them renting, because rent has been shooting up like crazy.
Look, we
And
get
every year you have to worry about that. Like every year,
Yeah.
like, oh, how much are you gonna raise it this year? Like $300-$400? Like,
yeah, we get all kinds of scenarios. So sometimes we get clients that are, they want to rent, and I tell them, actually you should probably buy a home. And then when we look at their documents, they're right. They can't even qualify because they've only worked for a year,
Mm-hmm.
or they just went from a W-2 to a 1099, as in working a 9 to 5 job to being self-employed, and there's not enough history to buy a home. And then there's people who are like, they tell me, you know what, I think I can afford a 500K home. I'm not sure. And I say, hey, well, let's go talk to William and see what he can do for you. And then when he does all his, paperwork, we find out the guy can get approved for like 700,000,
yeah,
200,000
overqualified.
more than what
Overqualified.
he was thinking.
That's crazy.
Yeah, some people, yeah, that's why everyone's different.
Like, you don't
And,
know.
yeah, we'll break down the numbers and kind of say, hey, this is how much you qualify for, and then I'll give you the max. Right, this is how much you can qualify for, but it's all about how comfortable you are paying that monthly.
And what do you typically like look at?
I basically look at your how much your income, right? Let's say your W-2. I look at your pay stubs, your W-2, your 2 years of work history, and your credit is important, and how much debt you have. And we put that in a calculation, and we kind of break it down, and we break down how much the price of the house you're looking for is, and then we kind of give you how much estimate property taxes and your homeowner's insurance. There's a lot of cost to it, but we'll break it down. I'll give you a little spreadsheet. And kind of break it down and kind of see, okay, this is how much it will cost you if you get at that house, type of thing.
And can people still qualify even though they have like credit card debt and personal loans, or even owe on taxes or something?
Yeah. So basically, people think that, I owe $30,000 in credit cards, I can't. No, we look at your minimum payments. Right?
Oh.
We don't look at your total, like, oh, you had $30,000. We look at how much that minimum payment for that $30,000 loan is. Right. So if it's $200 a month, it's going to be $200 minus off your income every month.
So the debt to income ratio is a monthly calculation.
Monthly calculation. So how much income you come monthly, and how much debt you pay monthly.
I see.
Right? And then that includes the potential mortgage you're going to get. So we add
Right.
it all together, and then that gives us a percentage.
I think you qualify for a home right now, Justin.
Whoa. Maybe. I mean, there's a lot of things that I'm trying to knock down right now. So, some debt and, some taxes, whatever. And so I had this conversation with Ant where I'm like, dude, I don't even know if I could qualify. I mean, I have a decent income, but that's always kind of like been on the back of my mind. So I'm always trying to knock these things out. I kind of have a plan to knock everything out in the next 5 months. But he was like, you could probably qualify right now, maybe if you, looked into it.
It's always good to kind of look at the numbers.
Yeah.
Right. Doesn't mean you have to buy. Like when
True,
you spend an app with me, right? Doesn't mean like, hey, now you're locked in. We gotta go buy ASAP. No,
Yeah.
We come. Sometimes it's a financial plan, right? You actually now go. I get all your income calculate. Go. This is how much you get, and this is how much. Calculate all your debt. This is how much you can buy, right? And then you see how comfortable you are, and then you kind of put that into your plan, the 5-month plan. Go.
Right.
Okay, maybe I can buy now, or I can just wait a little bit, pay all this off, and then you'll qualify for more, or you'll be more comfortable with the minimum payment, your monthly payment, basically.
I see.
So,
Yeah.
So it's always good to have actual numbers. And that's how we do when I was in investment banking. Same thing. We wanted to sit down and look at actual numbers. I don't want to be hearsay because I could be wrong. Like, especially when we do estimates, when clients ask us, can you give me an estimate? And then a lot of lenders, right, will give you the best case scenario. Because they want to get you, right? They want to be like, dude, this is the best rate. This is how much you're going to pay to get you in there. I always tell my clients, and most of my clients that have done loans with me, I always overestimate. Like
They want to give you the worst case
they
scenario.
there's some people that are shocked. Like, why is it so expensive? Because I want you to see the worst numbers so that the worst case scenario, this is how much you're going to pay. But it's never going to be like that. It's going to be less than that.
Yeah.
Imagine if you see the worst numbers and you're like, oh, well, I can still afford that.
Yeah.
Then you're good.
Yeah.
You know what I mean? That's why I say, like, you have to be able, if you can afford a home, like, damn, I forgot what I was going to say. So that's what I was saying. Like, if the rates are high and you're saying that you can't afford a home, like this is a perfect example of that. And I want to ask you, Justin, because not because I'm trying to sell you a home right now, but you are the average American who everyone's in the same boat as you, in a similar situation, right? First time home buyer, they do have a lot of debt. And what everyone like you is doing is you're waiting because your personal goal is paying down your debt.
Right.
Right. And just based on our conversation right now, you can probably qualify for a home, right? And right now, the home prices are very, very low, okay, compared to, a year ago. And probably in 5 months, when you are ready to buy a home, the prices are going to be a lot higher. Knowing that, like, do you still have your personal goal of paying off your debt and you want to buy a home that's more expensive? Or are you now more open-minded to look for a home now?
I'm more open-minded. I mean, that's the whole point of this, this talk, for me to kind of learn my options and see where I can go. You know what I mean? So I think having that in the back of my mind, I'm always open to check things out.
Right. Because the thing is, this year, if we're going on a little roller coaster of interest rates going a little up and down, it's pretty much saying it's going to be the same all year round. So if it's going to be the same all year round, but the home prices are going to go up a little bit because there's a little more competition, it's going to be a little more difficult for you.
That's what's going to happen when rates drop, because a lot of people waiting out there, and you'd be surprised how much money is out there.
Oh, yeah.
There are people just sitting on cash waiting, like, this rate's going to drop. And then what happens then? You're back to a bidding war. Right? Right now, it's maybe 3 to 4 people are bidding for a house. You're back to 20, 30 offers, right? So now they're trying to get the best, right? We're overpaying for a house. Waiving contingencies. Sellers are less likely to give you sellers credits, right?
Right now, everyone always just talks about how to buy a home and when it's best to buy a home. And what people don't know is that it's really hard to sell a home as a seller right now. It's ridiculously hard because people like Justin they have the personal goals where they're waiting to pay off their debt first, or other people are waiting for interest rates to drop. So because of these reasons, the sellers are not selling their home, which makes it actually the perfect time to buy a home because now you can negotiate anything.
They're more open to negotiations.
I wish I didn't buy a home last year. I wish I was buying a home right now.
So I know we talked about interest rates going down. Are prices in homes going to go down even more, or probably not going to see lower prices?
I don't see any lower prices.
So.
Yeah,
no.
In my opinion, I don't see it. I mean, it's gone down. I live in Fullerton, so that area, one of the houses I was looking at was, I think, last year was 1.5 million, and now it's dropped down to 1.2. So, and I don't see it going any further.
So we kind of like bottomed out.
I wouldn't say bottomed out, but I say it's pretty.
I think we're still in a correction phase this year, where the purchase prices are also in a little bit of a roller coaster effect.
Yep.
So if summer is the best time to buy a home, that means prices will go up because of more competition.
Supply and demand. So basically, more competition, the prices
going
to go up.
And then in the holiday season, Thanksgiving and Christmas, it's probably going to go down a little bit because no one's buying at that time
or selling.
Or selling
because people don't want to move out during the holidays.
Right.
People are on vacation and whatnot.
Yeah.
So there's that little roller coaster effect that you would foresee every year.
So there's no right or wrong time to buy. It's just what your situation is, and if that deal, that house, like that's why we have buyers now that just like, I'm not ready to buy, but I'm gonna look, and so I pre-qualify them. They look and they find a house they like and jump in, because you never know. It's always good to just keep looking, and the perfect house would show up, and you're ready to go, right?
Yeah, and then like the pre-qualify stuff, does it like run your credit? Like how does that work?
To get a full pre-approval, I do run your credit.
Got it.
The good thing is usually mortgage inquiries, they don't hurt your credit as much as getting credit like a credit card, like that. And the credit I use is pretty. I can use it for about 90 days or so or more, just as long as you don't go buy and get more debt.
Yeah,
right.
Yeah.
And I don't have to renew it. And then the next time I pull it is when we actually go into escrow, when your offer gets accepted, because we have to make sure if it's past that time period to make sure everything's still good. But as long as you and I know that you ain't going to buy another Tesla or something, and we get. I have buyers done that.
Hey, I'm trying to buy a Bronco, dude. Should I buy that instead? No, just kidding. Hell no.
No, you got to buy an investment home
Yeah,
first,
I know.
and then let that cash flow buy you the Bronco.
Yeah.
That's what we got to do. But, I've bought a home last year, and I bought a car last year. I got my credit ran 4 times, at least 4 times last year, and it didn't hurt too bad. I was, when I first started, it was like a little bit over 800, like 804, 805.
Nice.
And then it did drop to about 760, which is still great.
As long as you're above 740, that's excellent credit. Yeah, so even above 700 is good, but 740 is kind of like the target. Above 740, you're pretty solid.
But I think I'm happy with that just because I don't have much, because my rate was, my credit score was so good, it didn't affect me that bad. But when someone has a bad credit score, like in the low 600s, yes, that will definitely hurt you because now you might be in the 500s if you're doing so many things.
I mean, it wouldn't drop too much. Even for mortgage, it wouldn't drop that much. But yes, you're going out there getting a whole bunch of credit cards. Yeah, it's gonna ding you. So yeah, it's gonna ding you. But we have different programs for people with low credit scores too. Sometimes those programs have better rates, but it's cost to them, right? So we'll talk about that in the next episode where we kind of dive deeper into like programs.
Here's another thing. I have a lot of buyers, and I didn't think about this till just right now with our conversations and my own experiences. But there's people that say, you know what, I'm just gonna rent right now and save up. And then I'll buy a home by the end of the year or something like that, right? And, well, when I was buying this home right now, I got my credit ran, right? So it dipped a little bit. And then I had to wait for my house to be built. And so for that year, I had to rent. I got my credit ran then too. And then when the home was like within 30 days of me actually moving in, that's when it actually got ran again. Now that's 3 times, And then this whole year I'm waiting until I get this home, and then I can sell my car and buy a new car because I need a truck for work and stuff. And then my credit got ran again. So 4 times in a year my credit got ran. And people don't know, if you're renting, it's gonna get ran, and that actually might hurt you if you are in the 600s. If you're trying to buy a home in the next few months after renting, because I was doing short-term rental, month to month. So there's a lot of people in that situation too, especially when they move from another state to Vegas or to LA. A lot of people are short-term rentals, and I'm gonna tell you, it's gonna hurt.
Yeah. You guys ready to move on to some questions from the audience?
So we got some Q&A questions on my Instagram. I've asked you guys, anything about interest rates, anything about lending, any question you want me to ask a lender, drop it in. So Justin has a whole list of questions right now.
One of the questions already answered. Should we just ask it anyways?
Sure.
Yeah.
All right. So what is the current interest rate, and can it be lower?
So yes, the current interest rate today. Remember, rates change every day, and sometimes midday. And we'll get alerts like rates changing. Like, depending on your lender, we pay for a service because I work for a direct lender, meaning we're not a broker. We're the bank basically. So I get an alert when to lock or when the rates are going up or down.
You get an alert?
Yeah, via text.
Awesome.
You should lock. Like, say we have an offer pending.
Yeah.
And I go, let's lock the rate. And okay, we got to lock the rate today, or we can wait. Yeah. So,
that's what my stock app has too, and I can't figure out how to get those notifications to work because I'm like, when it drops down to a certain amount, I want to buy.
Yeah.
But then I don't get the notifications.
Yeah. Same. On Coinbase.
No, I'm talking about stocks.
Oh, stocks. Okay. I'm crypto over here, so
okay. Crypto. You guys are crazy crypto.
Nah.
I'm scared, and I have an investment, but I have my investment licenses and everything. I don't touch crypto.
Whoa.
I just started filing for my taxes, and I had to write an email to my tax guy. I don't know how to show proof for this because a lot of these crypto companies went bankrupt. So here's a list of things that happened this year. I've lost this much. I've lost that much. This company went down. That company went down. Tell me what I need to give you to show proof of that.
Damn. That is pretty crazy.
I hate crypto right now. But I love it if it makes me money.
But the second part of that question, yes, you can buy down a rate. So I think we answered that earlier in the episode. But we can always buy down a rate. It just depends how much money you're willing to pay. So
cool. All right, next question.
Oh, you know what?
Yeah.
Let me let me clarify. Can rates go down? Um, Rates can always go up and down, but when you buy the home and that's your rate, that is your rate until you refinance.
Yes.
Got it.
So it's locked
Fixed.
when you
Yeah.
buy the home.
Yeah, if you do a fixed rate and it's locked, but just because your rate's higher when you lock it, you can always refinance. So it's not forever.
There is no program where your rate goes down every year.
There's no program. There's no program.
Damn, we got to invent that. We got to start a nonprofit
Whoa.
where we can do that for people.
Well, we need a lot of funding. I don't know. I kind of know. If it was business, someone would be doing it already.
Yeah. All right. Next one is, when will the rates drop so they can refinance and move?
Refinance it, move.
Yeah, I'm not too sure.
So does that mean that they want to drop the rate then sell the house, or drop the rate so they can buy another house?
It sounds like they want to buy a second home.
Okay, so
they probably can't afford 2 monthly payments until they refinance on a lower rate.
okay.
It sounds like they just bought a home.
So depending on what your rate is, we just got to keep an eye on it. I mean, we're predicting, in our opinions, around summertime that rates will drop a little bit, and then we should have a small refi boom because people are buying houses at 7%, 6%, or almost close to 7%.
Yeah.
To refi at least 0.5% or 1%, and that should save them a couple $100 a month. So
it sounds like by summertime, that is in a situation of if you need to buy a home, it'll drop a little bit.
yeah,
But
yeah, big
when will it significantly drop?
that's maybe if we hit a recession.
Are we in a recession right now?
Some people are saying we are in a recession, but we're predicting we are going to hit a recession probably towards the end of the year.
And that's when it's going to drop.
It's going to drop, but the problem is, so recession sucks, right? But what also sucks, and it's this humanity, right? There's people waiting out there that are not going to lose jobs, or they're going to capitalize on the people that do lose jobs.
Right.
So these people are losing jobs, they're going to have to sell the house, right? So there's going to be that kind of boom, right? Because there's a lot, like I said earlier, there's a lot of people waiting out there. So unfortunately, when the recession hits, rates should drop a little bit, but also we're going to have that buying program because there's a lot of people ready to buy.
You know, this is where competition is going to kick in and prices will go up. When people start selling their home because they lost their job, they probably have a lot of equity in that home because of what they bought it for before that. So they're going to downsize to buy a smaller home that they can afford, but they're going to be fighting with everyone else who's buying too. That's in that same situation.
Yeah, because the rates are lower.
So
it's going to be, no one can predict it, but we'll see what happens. But in my opinion, I think that's what's going to happen. Like people are going to lose. Or yeah, it's unfortunate. I think 1.5 million Americans maybe losing jobs in the recession, but that's just 1.5. How many people are in the U.S.?
Like
close to like
30 million, right?
Yeah, a lot.
Yeah.
Right?
I have no idea.
So that's just it takes like a small percentage that people are going to lose, but it's gonna help some people, but there's always going to be people that are going to jump on that opportunity.
Yeah. So the next one is who gives a better rate? Credit unions, banks, or the direct lender?
That is a question that everyone loves to ask. It all depends on what the bank wants. For example, I used to work for a major bank, one of the biggest banks in the U.S.
Who's that?
Huh? I cannot say it on the podcast, but
okay.
I used to work for the biggest bank in the U.S. You look it up, you know what it is. So depending on what the bank wants, if the bank wants mortgages that few months, they'll drop the rate. They'll take the hit because they want that funding.
Wow.
If they're done with it, they'll just put out the higher rate. So
gangster.
Yeah. So it just depends what they want. Like the credit unions as well, right? A lot of credit unions do good rates, but the problem is their processes are slow. Right. So with direct lenders, we kind of, everyone's in lending to make money. No one's there to do anything for free. I need you guys, need people to remember that. No one's doing stuff for free. There's some kind of money being made.
Yeah.
So credit unions, yes, they'll sometimes give you a lower rate, but the problem with it is that their process is slow. So let's say I can close in 20 days, or like the fastest we've done is what, 14 days?
Yeah.
Credit unions, you'll see 30 to 45 days because that's why the rates are low. They have less staff, less processes in place, right? You may get a better rate, but you might not get the deal because the process is longer.
You know, I have a lot of experience in this part. From what I've seen personally, credit unions give you the best rates. But when I refied my home, it was with a direct bank, and it was the worst experience I've had in my entire life. The rate was incredibly low. It was a 2.625 at the time, right? And it took me 5 months to refinance.
Wow.
This is what takes 30 days or less.
Yeah.
It took 5 months. It's so stupid. So the hassle of working with a bank or credit union, I don't know if I'll ever do that again, because for 5 months, I couldn't buy things that I needed to buy. I couldn't do things for my business. Like, just my whole life was on hold waiting for this thing to, and imagine if you lost your job during that time. It's game over.
Yeah. So it all depends. I mean, you should shop around and you should trust a loan officer, and you pay for what you get for. It's like shopping for like when people buy the Lexus versus Toyota. Service is different, right? Service is different, right? You can pay cheaper and get a lower rate, but you might be lacking a couple of things. You might fall out of escrow because something because they're slow, right? While you pay a little, like maybe not a lot, but like this a good rate, but the service is excellent, right? It all depends, but of course rate matters. But sometimes saving $50 a month or $20 a month is not worth your headache.
Yeah.
I don't know. Toyota's coming up though. They just got that new Sequoia.
The Sequoia's very nice.
The Sequoias are
I'm eyeing that Sequoia.
Yeah.
Well, when the market turns around, because
Right.
They
got the new Tacoma that's gonna look like the new Tundra.
Oh, okay.
They're coming up, man. They just got the new Prius that everyone's liking.
I like the new Prius.
Yeah,
I haven't seen it, I don't think.
it looks pretty dope.
It looks pretty dope.
Yep.
Yeah.
I used to have a Prius.
50
I
miles per gallon.
went from a Prius to a Tundra. So
Whoa.
old school Tundra before the body change.
You're talking about 12 miles per gallon.
Yeah,
I know.
You're crazy.
Yeah, I'm getting like 10 miles. Because I have 35, so like 10 miles and 12 miles a gallon. Yeah. So, but that's besides the fact.
Get this man some more deals so he can pay for his gas.
No, not in that. We're here to help people.
Yeah.
But
Okay, what's the next question, Justin?
So the next question is, not much down payment with higher rates. What can I do?
talk to us, because there are a lot of programs. There are a lot of programs to help with down payments. I don't want to go into details, but there are programs depending on how much you make. Right? There are limits. Right? There are limits of maximum limits how much you can make for where depending where you live.
What do these programs do?
They help you with they help you with a down payment.
Like they give them money?
They'll give them money for some programs in California, especially in California. We have programs where if you make under a certain amount, they'll lend you like up to 3 to 5% of the down payment.
So
right.
What I know is that there's certain loans where they'll give you money, you don't have to pay it back, and that helps you with your down payment. There's others where they'll give you the money as a loan with no interest, but if you sell the home within 5 years, then you got to pay it back with interest. If it's after 5 years, you just pay it back, no interest.
Yeah, so there's a lot of different programs out there. So
how hard is it to qualify for something like that?
They're pretty hard. I mean, people see that and they're like, yes, free money. It's pretty hard. Rates are low. Rates are higher for those programs because they give you money.
Yeah.
But it's not impossible. It's just a little bit more extra steps.
So it's not free. The cost is hidden in the rate.
Nothing in life is free. I need everyone to understand. Nothing in life is free.
Yeah. Damn.
It may sound free because it sounds good, but there's always. I want everyone to remember. There's always someone trying to make money, right? Or there won't be this program unless there's some billionaire, gazillionaire that they really don't care, but they all care. That's how they became billionaires and zillionaires, right? I mean, if Elon Musk or really cared, they just give everyone in the U.S. some money, it will be okay, and they'll still be filthy rich.
Elon cares a little bit. I mean, he does his Twitter verification for $8 a month.
Oh yeah, that's
Mark
right.
Zuckerberg just said he's gonna do $12 or $17.
Yeah, for verified. A month. I just got verified, and I'm like, yo, what the?
Come on, Mark. You gotta be a little bit like Elon. Care a little bit.
Yeah. So the next one is, how much of a rate change is worth refinancing?
It all depends on your situation, right? Some people 0.25% makes a big, depending on how much you have your loan. 0.25% on a big loan, big difference. Yeah. Versus a small loan with 0.25%. It ranges from a couple $100 a month to like $25 a month. This depends on, like, you had that client refi for $20. Depends on the person, and depends on your situation.
I think it depends how long you're going to stay at the house
and
for.
How long you're going to stay for.
Most of the time, it'll be about 3 or 4 years before you make your money back from the cost of a refinance. So if you're going to stay there for at least 3 or 4 more years, go ahead and refi. If it's less than that, you might lose out on the money. But if you're in a situation where you want to save money on a monthly basis,
then it's worth it.
Then it's worth it, because if you sold and you made money It doesn't matter.
Yeah. Yeah. So it just everyone's different, right?
Yeah.
Some people are happy with saving $50 a month because that $50,
Right.
that's something, right?
To make it short, I would say if you can save $100 a month, go refi.
$100. I've seen a lot of people with $100 they'll do it.
Yeah.
Wow.
Yeah. It makes a difference.
Yeah.
$100.
That's like a free car insurance for the year.
Yeah.
Oh, yeah, that makes sense. Yeah.
Car insurance,
Something.
internet bill, right? Cell phone bill. That's something.
Thoughts on a duplex versus a single family home for a first time buyer?
It just all depends on your situation. If you are a person who doesn't have a family, go for the investment part of buying a duplex and then renting out the other house.
Yep.
But
with mortgage, it's like having a roommate but separate.
But if you have a family, you might not want to get a duplex. You know what I mean? So it just all depends on your situation.
A lot of it is all situated. There's no clear cookie cut thing for each person, right? Everyone's situation is different.
Yeah, I can tell you right now, because I have a family, I don't want a duplex. I want my kids to freely run around the driveway without someone else living in the back.
Yeah.
You know?
So it all depends.
Yeah.
Right? I lived in Highland Park, and we had a duplex, I think. So yeah, a duplex because we lived in front, and then in the back. But for a while, my uncle lived in the back. Right? But when he moved out, we just rented it out.
Right.
But it all depends.
The only time I think if you have a family and a duplex is worth it is if you have another family member moving into that house.
I loved it.
Yep.
Asians, yeah.
When I was a kid, I was in Highland Park too. I lived in the front of the house, and then my cousin and his family were in the back of the house. And I loved it because every day I was chilling with my cousin.
Yeah.
You know?
And it helps with payments, right?
Yeah,
so,
exactly.
And especially nowadays, a lot of mother-in-laws want to live, so it might work out. Like you live in the front and mother-in-law's in the back.
Yeah.
Old school, you know?
Yeah. This might be a dumb question. This is
No questions.
This is my question. Is there any way to throw your debt into your home loan somehow?
That is a dumb question.
That is not a dumb question.
I'm just kidding.
I might not put this in the podcast, but
great question.
It's a good question. Good question. And when you're buying a house, no, you cannot do anything.
Got it.
However, once you buy the house and your house value grows, right? You can refinance, take some money out, right? And then you can use that money to pay off all your debt. Or right now it's not a good time, but some people get home equity lines of credit, where it's like a credit card, but lower rate, a little bit lower rate. It's still like 9%, 10%, but that's credit card rates what, like 17%, 18%?
Yeah, something like that.
17.
Yeah.
Some are even like 24%.
Yeah, that's high, but some people do that too. So they leverage. That's the good thing about getting a house. You can leverage that house to pay off other debt, or use the equity to start a business. Pay for your students, your kids' student loans or school. I have people do that all the time. People buy a house, they'll have $200,000 equity. They take money out and pay for their kids' college loans.
You know, I know people out there right now are not paying for their student loans because they're waiting for Biden to approve the student loan forgiveness.
They've been doing that since like the 90s, right?
Right.
Oh,
but
yeah,
I know people who haven't been paying the student loans for like 2 years now.
Because of those
like,
laws.
what?
Yeah, because of the laws. But then when you buy a house, I still have to count those student loans again. So even though you're not making payments,
really?
I'm still counting the minimum payments, which we usually charge, depending on the program, either charge 1% of the amount as your monthly payment.
Oh, I didn't know it was a percentage. I thought it was the whole thing.
No, it's a percentage.
Okay.
It's always a percentage. We don't charge the whole thing. But like, let's say you owe $10,000, I'll take 1% of the $10,000. That'll be your monthly payment. I'll hit you against it.
Oh, I see.
Yeah,
Nice.
so that's a little question. So just because you don't have student loans, I'm still going to count it. I see it. I'm going to count it.
Yeah.
Because we want to make sure that you fully qualify.
Right.
You have to.
Right.
You have to.
Yeah. Cool. Those are all the questions.
Awesome. All right, William, thank you for being here in today's episode talking about interest rates. I did learn a lot. How about you, Justin?
Dude, I learned so much.
Yeah.
Yeah, I'm ready to buy a house.
Well, thank you for having me, and thank you for I love you're not a good friend, so I'll be coming back.
I'm not a good friend?
No, you and I are good friends.
I thought I heard differently.
No, we're not very good
okay.
friends. We're grown up together. But I'm always here. I'm always down to fly out. I told my wife I'm flying out once a month out here.
Thank you. We appreciate you. Hopefully we'll have you on the next episode as well, talking about more things, because a lot of you guys have questions for the lender. So keep asking them in the comment boxes. If you want to reach out to William, what is your email, William?
It is william@thegteam.com. So that's the TheGIH team.com.
Okay, so we'll also put it in the description box for you guys to click on. So if you want to get qualified or pre-approved, hit up William. If you need an agent, hit me up. You'll see everything that you need in the description box. Till next time, guys, thank you.
Thank you.
Get that next win.